Thanks everybody for joining. We'll give it probably an extra minute just to make sure everybody can join, and then we'll kick off today's webinar. Just about enough time to grab a cup of tea or a coffee, and we'll kick off at 12:02.
Are you suggesting people are going to need a caffeine addict?
I would never say that, Ali. I'll just run through a little bit of housekeeping before we kick on. This webinar will be recorded, so if you don't want to be seen, please do turn off your camera. Towards the end of the webinar, just after the Q&A, we will also be sending over a feedback survey. Please do take your time to kind of fill this in. It helps us moving forward, delivering the best content for you all. There will be a Q&A as well, so we'll answer all questions towards the end of the webinar. So you can either raise your hand and ask the questions directly, or you can pop them in the chat. Alternatively, if there's something sensitive that you'd like to ask, please reach out to us off the back of the webinar, and we can set something up on a direct basis. So I'm going to kick us off, Al, if that's okay with you.
Great.
So again, thanks everybody for joining. What we'll do is we'll start with who I am and who OnSecurity are. So I'm Adam Foodie, and I'm one of our pre-sales managers here at OnSecurity. I've worked in cybersecurity for around 8 years, and specifically around penetration testing, vulnerability management, and governance, risk, and compliance. A little bit about OnSecurity. We are an offensive security company running CREST-accredited manual penetration testing, vulnerability scanning, and threat intelligence in a single platform. And ultimately, we're trying to solve some of the problems with traditional testing. I'm joined today by Alistair Goodwin from Adoptech. Adoptech are one of our key strategic partners, and today we're going to be picking Al's brain on the ins and outs of the DORA regulation. So I'm just going to hand over to you, Al, to introduce yourself and explain a little bit more about what Adoptech do.
Thanks, Adam. Good afternoon, everyone. Yep, I'm Al Goodwin, co-founder and CEO of a company called Adoptech. Got a background in technology and trading. Worked for a number of banks for about 25 years. More recently, I spent time acquiring distressed software companies, primarily RegTech companies, turning them around and selling them on. And then we founded Adoptech with 2 co-founders 5 years ago now. Adoptech provide consultative support and an automated compliance platform to help SMEs, typically software companies, comply with ISO 27001, SOC 2, DORA, various information security certifications. So that's me.
Fantastic, Al. So before we kick on, let's explain kind of why we're here. And as we look ahead to January 2025, the clock is ticking for financial services organizations to prepare for DORA compliance. Many of you may be aware of the regulation, but there's still a lot of uncertainty around what's required to achieve it and what aspects of the legislation are mandatory. And today we're here to demystify those requirements and provide some clarity on the certification process, helping you better understand how to navigate this crucial regulatory milestone. So a quick run through of today's agenda. We'll start with discussing DORA's key requirements, definitions and deadlines. We'll then move over to demystify any common misconceptions and questions about the regulation. And we'll finish with aiding you all with some best practice advice to achieve compliance and avoid any potential headaches. So first off, probably best to start with what is DORA. So Alistair, would you mind starting to explain what DORA is, why it's such an important regulation, and the definition, please.
Of course. So DORA stands for the Digital Operational Resilience Act, and it kind of does what it says on the tin. It's really about operational resilience. So within the financial services sector, so it's probably worth providing a little bit of background. So for many, many years, the global financial regulators have been concerned that there'll be some kind of incident that could have a significant impact across the whole financial sector. So a little bit like in 2008, where financial risk management didn't live up to its requirements, and we had a crisis. The regulators are concerned that there might be some kind of information or cybersecurity incident that could have significant ramifications across the whole of the industry. So for a long time, they've been discussing what they can do to reduce that information cybersecurity risk within the financial services sector. And DORA is really what's come about of that. There are similar regulations being introduced by regulators in the financial services sector across the globe. It's already worth mentioning, DORA is legislation. It's not optional. It's not a standard like many others out there. It's legislation that came into force nearly 2 years ago, and it becomes effective in January the 17th next year. If you've listened to any other webinars, or you've seen any presentations or anything around the Digital Operational Resilience Act, you'll have probably heard about things. People talk about something called the 5 pillars. Now, the actual legislation is split into a number of chapters, but the 5 key chapters that impact financial service firms and their suppliers are known as the 5 pillars, because they're the 5 key areas. Thanks for clicking over, Adam. So if we just touch on each of those 5 areas, it will give you a good idea of what this is all about. So first and foremost, DORA requires financial service firms to implement the technology risk management framework. They refer to ICT, which stands for Information Communication Technology. Just think about technology. The idea is here that you have a process in place to identify the risks that face your business, and you have controls in place to manage those risks. And we're specifically talking about technology risks here. Then the next pillar is around incident management. So DORA also requires the financial service firms to ensure that they report incidents, particularly major incidents, to their national competent authorities, their local regulators, in a timely manner. The next pillar is around operational resilience testing. So this is where the Act requires regulated firms to not to just put things on paper and talk about things they could be doing, but actually evidence they are testing things on a regular basis. So that means testing failovers, backups, redundancies, vulnerability scanning, pen testing. You know, the idea here is that you're not just saying you're doing things, you're actually doing them, and you're being able to evidence them. Next pillar, managing third-party risk management. So kind of speaks, this is about the fact that the regulators are particularly concerned that lots of financial entities, whether they're banks, you know, payment providers, credit institutions, investment companies, have outsourced a lot of their technology to third parties, whether that's a cloud service provider, whether it's a SaaS platform. And what they're worried about is that there may be risk associated with those suppliers. So, you know, if something were to happen to one of those third parties, it could have significant implications across the union. And finally, the 5th pillar is all around information sharing. So the idea here is that firms can share threat intelligence with the regulators, and they will in turn share that with appropriate other entities within the financial sector to try and, particularly if there's some kind of cyber sort of threat intelligence that could protect other firms, they'll share that information with the other financial entities in the sector. So yeah, that's kind of the 5 pillars, and I guess a very brief introduction to DORA. I mean, it's worth adding, there are thousands of lines of legislation and supporting text. So whilst we're only going to talk about this briefly today, there's a lot more we could talk about.
Fantastic, Gal. And just a quick question on the 5 pillars before we move on. Is there a particular pillar or particular control that you discussed there that you see organizations struggling to adopt compared to the others?
Well, if we just think about each of them in turn, so risk management, most suppliers who are in scope and most regulated firms will already have some kind of risk management framework in place. So if you think of suppliers, let's say fintechs, they're likely to be complying with SOC 2, ISO 27001, NIST, those type of existing standard frameworks that are out there. So they're likely to have something in place. Perhaps not as prescriptive as DORA, but they'll have something in place. So in this thing, it's mainly going to be carrying out a gap analysis between their existing process and the new DORA requirements. When it comes to incident management, again, most people will have something documented about how you're going to act in an incident. I think the key difference here is, again, demonstrating that, it works, you've tested it. The other key thing is here, DORA is very explicit on how you report and when the timelines within which you report. So you've got 4 hours, for example, from the moment of identifying an incident and categorizing it as major to report that to your competent authority. That can cause challenges, particularly when you've got a complex supply chain. So it could be a supplier that's got an incident and that ripples up and impacts one of your services. That does mean you're going to need to ensure that there's an efficient way of collating all that information, receiving it, and sending it on to your competent authority in order to meet your regulatory obligations. Next, if we look at digital operational resilience testing, now this is challenging in terms for a number of firms in that they'll probably be doing some testing to date, but it's being able to evidence that. So you definitely need to spend more time being able to evidence you're doing these BCP DR tests. Now, I think the fourth one, risk management, third-party risk management, supplier risk management, that's probably going to be the one that is most immediately causing the problems for firms, because you need to have in one place, you need to collate a list of all of the suppliers, technology suppliers you have, all of the contracts you have with each of those suppliers, and each of the services that are being provided under those contracts. Collating all that information is a challenge, and DORA requires you to share that information with the regulator in a particular quite complex format called the Register of Information. But I think in terms of the pillars and which ones people are struggling with, it's that third-party risk management. Typically what you see today is people will send an annual questionnaire out to their suppliers. And to be honest, it's a bit of a tick box exercise in many cases. There isn't really risk mitigation going on. And that's what DORA is really trying to impress on people. They're very clear about the fact that you as a regulated entity have chosen to outsource to third parties. From there, they don't really care about the fact you've made that choice. You still have to have the same oversight and governance of that third party as you would if it was an internally provided technology service. So I think that's the piece where people are really going to have to change the way in which they operate and they interact with third parties. They're going to need to have much more efficient communication mechanisms in place with all of their third parties and collate all of this data into this register. So yeah, we're definitely seeing challenges there. The information sharing piece, that's optional. So to be frank, most people are kind of ignoring it right now.
Fantastic, Al. So now we've gone through the 5 pillars. Can we discuss around timelines for compliance? So compliance, again, is required by January 2025. What existing key milestones should these organizations be aware of as they prepare?
So the legislation's been passed, right? So it's nearly 2 years since that's been passed. So, and probably the key milestone is January the 17th next year. That's when it becomes effective. Now, in reality, the regulators have not provided a number of regulatory technical standards and implementary technical standards. So they're documents that the regulators provides alongside the legislation to give people guidance on how they should actually implement DORA. Now, a number of them have been going back and forth between the European supervisory authorities and the European Commission. And that means there's been a delay. So whilst the legislation's there and you have to follow it from January the 17th, in practice, it's not possible in some cases because they haven't finalized some of the information. For example, some of the reports that you need to share with the regulators, they haven't finalized the format of those reports, and we're not expecting to see them finalized until early next year. So I think whilst you can't say to anybody that, because you should be following it by January next year, the reality is the regulators appreciate you're not going to be able to fully follow it by January. They've also said, for example, some of the information you're not going to need to be able to share until Q2. So, for example, the Central Bank of Ireland indicated they won't be collating your supplier information until April 2025. There's also been indications that there'll be no enforcement action during 2025. So again, people are sort of being given time to adjust and become compliant with DORA. So in reality, the regulators, what they're saying is that they expect you to at least have done a gap analysis versus the legislation and have a plan and process in place to address any gaps that have been identified. but equally have to be cautious here. Everybody should, in reality, be compliant by January the 17th next year.
Fantastic. Thank you, Al. So again, just from what you're saying already, Al, it's clear that DORA is going to have a wide-reaching impact. Would you mind breaking down who's actually affected by this regulation?
So DORA applies to over 20,000 regulated financial entities. When I say regulated, it means regulated by within the European Union. So I guess the key thing with DORA is it does bring into scope a number of kind of regulated firms that perhaps weren't in scope for some other recent legislation. So it's everything from credit institutions, payment institutions, investment companies, crypto asset service providers. They're relatively new in terms of a regulatory scheme. So they're also in scope, as you'd expect, the usual exchanges, MTFs, clearinghouses, the pension space, credit rating agencies. So a large proportion of EU regulated firms come into scope. Probably what's different and is the first is that third-party suppliers are also in scope of DORA. Whilst they're not being directly regulated, they are in scope. Now, the obligation to carry out oversight on those third parties falls to the directly regulated financial service firms who are outsourcing to those third-party suppliers. But they are in scope, and there's specific things expected by both the regulated firm and the third-party service provider. The implications to those technology suppliers differs depending on the business function that they're supporting within the regulated firm and the criticality of that business function. There's the concept of proportionality as well. So effectively, the greater the risk, the greater the oversight. And then finally, there's a new concept that's been introduced with DORA, and that's what you call CTPP, which stands for Critical Third-Party Service Providers. Critical third-party service providers will be identified by the European supervisory authorities in the second half of 2025. These are the software suppliers, technology suppliers that underpin and are seen as critical across the whole of the union. So they're carrying out analysis based on some of the information being shared through the reports to determine who are the critical suppliers across the whole of Europe. And if something were to happen to one of those, it's going to have a significant impact across the financial services ecosystem. So, you know, it's going to be your gig cloud providers, your market data providers, but we don't know at the moment how wide that scope is and how many suppliers are going to be considered critical third-party providers. There are quite big implications of being defined as a critical third-party provider. If you are selected, the second half of next year, if you don't already have an office in the European Union, you'll have 12 months to set one up. You will get direct oversight from a new information security audit body that's been set up within the European Union. So they will carry out direct oversight of those critical third-party suppliers.
Fantastic, Al. I've got a couple of questions on this slide. Would you mind giving a quick example of a critical and non-critical service provider, please?
Okay. There isn't really a concept actually of a critical or non-critical service provider, and it's quite an important misconception actually. So it's worth spending some time on this. Each regulated financial service firm needs to break down their operations into different business functions. They will determine whether those business functions, or they're known as business services under UK legislation, are deemed critical to their operations. They will then map to each of those functions all the technology services that support that critical function. So you as a supplier may be supporting a critical function within, let's say, a bank. But you as a supplier are not, under the terms, considered critical. You're just supporting a critical function within that bank. The implications are, if you're supporting that critical function and your material to that function, you'll get additional oversight and you'll effectively be expected to comply with a lot of the DORA legislation in the same way any internal IT team would within a bank today or any other financial institution.
Fantastic. And just a final question now. Do you see there being any benefits in being categorized as a critical third-party service provider?
Possibly, yes, because can you imagine if you're going through a sales exercise, you're a supplier, you're going through a procurement exercise, and it's a choice between you as a critical third-party service provider and a firm that isn't a critical third-party service provider. The firm that has that is a CTPP is going to be preferential to the bank or financial institution when they're selecting a supplier, because they know you're getting direct oversight from the European Unit Audit Body. Now, whilst it doesn't remove their obligation to carry out their own due diligence on their suppliers, the knowledge that this new audit body is providing direct oversight of that supplier is going to give you that warm, comfy feeling that, it's safer to work with this company. So yes, there are potential benefits to being considered a CTPP. Now, interestingly, there is the option to opt in. And there's a process you can go through to opt in to being a CTPP if for some reason you think it's going to be disadvantaged. It's going to be a disadvantage not being allocated that. But of course, quite significant cost, time, effort comes with being directly audited by the regulators. You have to pay for the oversight yourself. You have to have a European office, and you're going to have people that are familiar with liaising with the regulators. So there's a potentially quite significant cost to that.
Fantastic, Al. So in the next section of today's webinar, we're going to focus on some of the key objectives of DORA. So Alistair, quick question. So with many other frameworks out there, for example, at the start of this call, you mentioned 27001, SOC 2, NIST. How does DORA overlap with these existing frameworks and standards, and what similarities are there, and kind of what differences are there out there?
Okay, yeah, there are tons of standards. I guess the key thing is this isn't a standard. This is legislation. So a lot more like a GDPR of this world, there are some pretty significant fines in place if you don't comply with it. It's not optional. So that's the key difference. The other piece is that actually DORA is really quite prescriptive. When you mention a lot of those previous frameworks, they may list a number of sort of information security controls you should have in place. Typically, they're optional, and they're kind of based on some risk analysis, and then you apply controls that are appropriate to the risk that your business faces. DORA is really quite explicit in terms of the things it expects you to have in place. Just by way of an example, there's around 100 controls that you would typically review for within ISO 27001. SOC 2 is quite similar in that sort of space. Within DORA, we've mapped sort of 150 controls and 400 different rules from the legislation that you need to be following if you're a regulated firm. There are simplified risk management frameworks that apply to small MiFID companies, and there is the concept of proportionality. But even there, when you go through the legislation, it still requires you to do quite a lot of things. So key difference, it's legislation. Yes, there's a large overlap in practice in terms of the actual controls you should be implementing. But there's really quite a large reporting requirement associated with DORA as well, and some quite complex reports that you need to be able to evidence, generate, and keep up to date.
And what are you seeing currently within the market in terms of organizations' readiness? Are we seeing delays? Are people focusing on kind of legal and contract changes? Just want to quickly discuss, Alistair, the current state of play for these organizations.
So what we've seen over the last year or two is a big focus on the legal side, because under DORA, you need to have particular clauses in place with each of your suppliers. So the regulated firms are reviewing all of their supplier agreements and making sure they've got all the appropriate clauses in place. So big focus on legal, repapering. What we're typically seeing is banks sort of imposing addendums on their suppliers, and vice versa. We see the suppliers trying to sort of proactively produce addendums that are supplier biased, not bank biased. So that's kind of, we've seen a lot of activity there. And whilst that should be, and there's no real reason people shouldn't be compliant with that by early next year, in reality, we know most companies are not going to get this repapering exercise done by January the 17th. It's a huge exercise for some firms, particularly those that are new into scope. There's been some other legislation like EBA guidelines and the like that came in a couple of years ago, but it didn't have quite as wide scope in terms of the companies it brought into scope. So those, particularly those that are new in scope, it's a big exercise from legal. So we see compliance and regulatory teams involved. What we don't see, which perhaps a little concerning, is kind of, I guess, the infosec teams, the technology teams, who are largely the ones that are actually going to be implementing a lot of the controls under DORA. We don't see a huge interaction from the technology teams at the moment. It still seems to be kind of a reg compliance legal space and not filtering down to actual actions being carried out by the underlying technology teams, internal audit teams, infosec teams.
Fantastic, Al. And what are you seeing for the third-party technology suppliers?
They are kind of in the dark because the regulation has been pushed out to the regulated firms, the financial entities. The financial entities are not then communicating with their suppliers around what the implications are. So we see a lot of suppliers just, they might now just be joining webinars like this, and it might have really significant implications to those suppliers. So yeah, I think the reality is we see a lot of suppliers who don't understand it, have never had to be involved in any kind of financial service regulation before, being a bit in the dark. So yeah, there is a problem with the communication from the regulated entities and the regulators to the underlying suppliers who are now in scope for this, but in many cases just don't know what's about to hit them.
So Al, DORA can feel overwhelming for organizations, and you've mentioned a few already, but I just wanted to ask, what are some of the most common questions you're receiving or even misconceptions that you've encountered so far?
By far the biggest is the confusion around the term criticality because it's used in two places. So just to reiterate what I mentioned earlier, the financial service firms break down their services into business functions, and they determine whether that business function is critical or not. They then determine which technology services are supporting that business function, and they determine whether that business function is critical or not. Each of those business services, whether internal or external, they have to do a mapping exercise. Doesn't mean that the supplier is critical. It just means they're underpinning a critical business function. Separate to that and completely different is this concept that the European Union are introducing around CTPPs, critical third-party providers. Second half of next year, they're going to determine who are critical across the whole union, which suppliers are critical, and then they're going to be directly audited. Two completely separate things. And what we're seeing in the industry is that the regulated firms are starting to contact their suppliers and say, right, you're supporting a critical business function of ours, therefore we're going to carry out greater due diligence on your services. Suppliers are going back to the regulated firms and saying, we don't think we're going to be considered critical across the union. Completely different things. The suppliers don't understand that it's not their decision whether or not they're critical or not. It's up to the, let's say, a bank's decision to determine whether they're supporting one of their critical functions. So there's that's without question the biggest confusion. It comes back to there isn't that communication from the buyers, in this case, the financial entities, to the suppliers, in this case, the fintechs. And there's no direct communication from the regulator because the regulator has no mandate to speak directly to the suppliers.
No, thank you, Al. And just while we're on questions again, there will be a Q&A towards the end of the webinar. I've seen a few questions in the chat. So if you've got any questions you want to ask Al, please pop them in the chat and we'll cover them towards the end of today's webinar. So finally, Al, I'd like to kind of discuss the digital operational resilience testing. Can you go into a bit more detail on what this means and if possible, kind of compare it to traditional behavior you're seeing from organizations?
Absolutely. So in practice, this is one of the things I talked about, the technology teams not being too involved, but this is where they really need to be involved. So historically, and we'll all know this, when it comes to operational resilience testing, quite often there'll be documents saying, if something happens, we'll do this. No one's actually tested it. When it actually comes to the reality, then there's real problems. I think, COVID's a prime example of that, where, many organizations had plans that, they had to dig out from under a desk somewhere, and they'd never actually tested them. This is a great example. And this is what DORA's trying to eliminate, that risk. So what they're saying is there's lots of things that you should be doing, but you need to test them on a regular basis to ensure they're fit for purpose. So whether that's anything from BCP testing, failover testing, vulnerability scanning, code scanning, pen testing, there's a long list of things under DORA that they expect you to be carrying out, doing it on a regular basis, documenting it so you can evidence it if the auditor knocks on your door, and also learning lessons from those. So it's really important. They want to see the fact that whatever exercise you've been through, lessons have been learned, and that feeds back into your risk management system, which might result in additional controls.
Thanks, Al. Really insightful discussion there on DORA. What we're going to look at next is the specifics of DORA's testing requirements, building on kind of what Alistair just discussed there, and how they can kind of tie into your day-to-day operations. So Article 25 clearly emphasizes that ongoing testing, just like Al mentioned there, rather than single annual events, are essential for ensuring that IT resilience. That means all of the tests you perform, again, Al mentioned a few of them there, whether it's vulnerability assessments, penetration tests, source code reviews, must be conducted on a regular basis to continuously address emerging risks and vulnerabilities. And this means it's moving away from just compliance and becoming resilient as an organization. And staying on top of regular testing, monitoring, addressing these kind of vulnerabilities will be challenging, especially when balancing it with other requirements. So what we're going to do now before the Q&A is explore how the OnSecurity platform can simplify this process for you. Again, moving away from just compliance and ensuring your organization becomes resilient, whilst again meeting all of the relevant key testing and reporting requirements, which have been outlined by the DORA regulation. So again, building on from our discussion around ongoing testing, we know that it can be a little bit challenging to manage and evidence all of your security controls and stay compliant. So the OnSecurity platform, which we'll take a look at in a moment's time, centralizes all of your penetration testing and vulnerability management requirements, which helps you identify, track, and remediate your risks efficiently and easily. It also simplifies the management and evidence of your security controls with detailed, actionable reports and insights, again, ensuring you stay resilient and align with DORA's requirements from one centralized platform and place. So what we're going to do next is take a closer look at some of the key features of our platform and how they can make this process for you more efficient and manageable. So the first kind of feature to take a look at is the kind of pen test dashboard, which provides that full pen test timeline visibility. And this will ultimately provide you with a centralized view for all of your pen testing requirements. So it could be scheduled tests, it could be completed tests, or draft tests in one centralized place. This means for all of your management teams and your technical teams, they have that one-stop shop to easily track your full testing lifecycle, ensuring there's full visibility in what's been done and what's planned to be worked on moving forward. And again, visibility and evidence is essential for evidence in compliance with DORA. So having that clear audit trail of all of your security efforts is going to be massively beneficial as you look to comply with the DORA regulation. The next feature to discuss is real-time reporting. And ultimately, what OnSecurity do within our testing process is report findings when they're identified, rather than waiting for a test to be completed, which is typically followed by traditional testing. This will mean your technical teams or whoever remediates these security risks can resolve and remediate vulnerabilities immediately, reducing the risk of that escalation or before that security risk becomes, a much bigger problem. And for each finding that we do find, or the vulnerability that we do find, we'll have all of the relevant information it needs. So things like CVSS ratings, impact assessment, technical summaries are all included through one centralized place. And via the platform, you can drill into all of the relevant information, and it's going to be far more efficient than using static PDF reports to bring resolution to security risk. Again, that being said, if you needed to export reports for whatever reason, whether it's audits, internal reviews, you can always do that from within the platform. And building on from kind of the real-time reporting, you can also communicate with your testers via the platform. You can also use things like Slacks and Teams integrations. And what this means is, as and when we have a finding or a vulnerability, you can communicate with your testers and bring that fast feedback loop, which is ultimately going to speed up the resolution or remediation times for all of your risk. And the final feature is going to be access groups. And what access groups means is you can provide specific access to specific tests or findings to the relevant teams that are responsible for managing them. So an example of this could be you've got a cloud team responsible for managing your cloud infrastructure, or you've got developers responsible for managing your web and mobile-based applications. You can then tailor this access, which will enhance your resilience, ensure your compliance efforts are optimally managed in line with DORA's regulations. So with these 4 key features, the OnSecurity platform can help you simplify your testing process and meeting DORA's requirements for continuous testing, ongoing management, and operational resilience. So on the next slide, we've got a kind of quick recorded demo here. So as you can see, this is the kind of pen testing dashboard, full transparency about any in progress and completed tests. I do believe we're going to select an in-progress web app test. So on the left-hand side, all of the findings are available. You can drill down and get all of the relevant technical and kind of scoping information. There's the comments box there. So if you need to kind of communicate with any of our testers, and once you fix things, ideally, you can then export a report for compliance and audit reasons. So moving on from penetration testing, we also deliver vulnerability scanning, which is again going to be required by DORA. And what vulnerability scanning is that continuous automated monitoring of your attack surface. It ultimately identifies potential weaknesses, but it doesn't exploit them. And that's the main difference between a vulnerability scanner and a penetration tester, which will simulate manually these real-world attacks to validate the vulnerabilities. But they do work hand in hand. The 2 approaches complement each other. Scan is that automated approach, which gives you that ongoing insights across your infrastructure, while penetration tests will dive deeper into critical risks, ensuring you as an organization will have that complete view of your security posture. And that's all about what DORA's asking for, proactive, ongoing approach, which will keep you ahead of evolving threats and support DORA's requirement for ongoing risk management. And we'll just go through some of the features of the vulnerability scanner. The first one is it's going to be continuous, it's easy to set up, and you can choose to automate either daily scans, weekly scans, or monthly. I've got a preference for daily because it's the best practice when it comes to security. You can also choose your preferred scan time to minimize disruptions, or let's say your engineers start at 9, you can kick off a scan at 8. So when they come in to deliver their work, they've already got the results available for them. And you can also launch on-demand scans instantly within the platform as well. So you could have fixed, a load of, missed patches, let's say, and you want to see if they've been implemented correctly, you can kick off an in-demand scan. And just like our penetration testing, all of the findings are provided in this kind of same manner. So you can drill into them, find out what the ratings, the technical advice, and the technical summaries. So no more working your way through static PDF reports. Again, making that remediation effort faster and far more efficient. Integrations is the next one. So within the platform, you can integrate with existing ticketing systems or CI or CD pipelines, ensuring, again, faster remediation, which fits in with your existing workflows. The next is kind of the platform itself, and within the platform, which we'll look at in the next slide, you will have a timeline view, which lets you review how you've managed your vulnerabilities across the date range. You can go back in time, and for each finding that we do find, we'll link this to a specific business risk. And a business risk could be something like GDPR violations, which can help you connect security efforts to compliance priorities. So we'll just look at the next slide, which is going to show you what the scan platform looks like. So as you can see, on the left-hand side has all the relevant summaries. You've got all of the latest findings, your active targets, So these can be domains, IP addresses. You've got that timelined view there, so you can see how you've been managing vulnerabilities with all of the severities accordingly. I think we've just done there, we've gone back in time. Here are kind of the business risks. And again, if you wanted to kick off an on-demand scan with up to 15 per month, you literally just click this button. So everybody, thank you for joining us today. A massive thank you to Alistair for walking us through the key elements of DORA compliance. So I'm going to open up now to see if anybody's got any questions. If you want to speak directly to us, please raise your hand and you'll be able to ask that question, or alternatively, pop a question in the chat. Again, I said it right at the start of the call. If there's anything you want to ask that's potentially sensitive or you don't want to share it on today's call, we've added a separate question box for our feedback survey, and we'll get in touch with you directly and separately to discuss your question further.
I believe I can see a couple of questions in the chat. Shall I address those first?
Yeah, sure.
A couple of those. Yeah, cool. So first question's around, okay, so it says, could you talk a little bit about the requirements that DORA says regulated entities must apply to their ICT vendors? I've been struggling to find clear information on which requirements apply to ICT vendors. DORA is very clear in one of the chapters, I can't remember which number off the top of my head, about the due diligence you need to carry out before selecting a vendor and the ongoing oversight. What it doesn't do is state exactly what each of those vendors should be doing. Now, there's a good reason for that. Under DORA, they don't differentiate between the controls and processes you as an internal technology team might have versus a third party. So when you look at the DORA requirements for you as a regulated firm, the things that you're going to comply with, you need to think about them they need to be complied with, whether it's an internal technology function, a supplier, or potentially a supplier's supplier, or even a supplier's supplier's supplier. So it's the same requirements, same DORA requirements that apply to your third parties. Now, I'm going to be clear here. That does apply when they are supporting a critical or important function. There's much lower obligations, whether it's an internal sort of technology function or an external technology service provider, if it's not critical, much lower requirements. The big focus on DORA is making sure your suppliers that are supporting critical functions are meeting these requirements, and they're exactly the same requirements, whether it's a third party or your own internal team. Also worth mentioning, there is a concept of proportionality that I mentioned earlier. However, when you actually look at what it talks about under proportionality, even if you're following a simplified risk management framework because you're a small firm, unfortunately, it doesn't actually hugely reduce the amount of sort of controls and processes and procedures you need to be following. So hopefully that answered your question. If it's still not clear, feel free to ask another question, or there we go, I can see one coming in. So off the back of that, we'll come on to that in a sec. So yeah, any other questions on that? So come back to me after, we can talk offline. Next question, can someone explain how DORA applies to UK regulated financial service firms? If you're a UK regulated firm and you have no operations in the European Union, you are not directly in scope unless you provide technology services to EU financial service firms. So you can imagine, let's take an example, you're an asset manager in the UK, you're only in the UK. However, I mean, that is unlikely, but let's use it as an example. You're an asset manager only in the UK, but it happens that you've also got a technology function. And it happens that that technology product is being used by EU regulated financial service firms. In that case, because of that technology function, you'll be in scope and you'll be expected to follow DORA because of the ICT service you're providing into the union. It's a little bit like GDPR where, you know, it doesn't matter where in the world you are, if you're providing services to citizens in the European Union, you fall under GDPR. It's a very similar concept with DORA. So whilst you might not be directly in scope, you might be brought into scope because of technology services. I mean, there aren't too many UK firms that are solely working in the UK. It's also worth mentioning the UK have an equivalent, and I'll be careful when I say equivalent. It's not direct equivalence in the EU terms. They have a very similar regulation, called UK OpRes and the third-party regime. They've both recently been updated, the rules there. Now, they're quite similar. Not surprisingly, the regulators are trying to be quite aligned in this. However, the UK equivalents tend to be more principle-based and a lot less specific in the sort of things you have to have in place. So similar aims, but they're nowhere near as detailed in terms of the things you need to be doing. It's a broader risk management framework. Okay, next question. Does your platform apply to projects which utilize DLT, aka CAFs under MiCA? There's lots happening on the blockchain. Yeah. So if we're talking about Adoptech, the company I represent, yes, we have customers that are working towards MiCA compliance. One of the requirements of MiCA compliance is that, and getting your MiCA license, I should say, is that you are compliant with DORA. Now, the interesting thing, there's a lot of firms in that DLT space who are working towards a MiCA license, which requires DORA, but DORA is not live yet. So yes, we're working with a number of firms in that space. And whilst not everything's explicit, the general requirements, there's lots of sort of detailed questions about what does the regulator mean by this. But if you just step back and think about what are they trying to achieve, you can generally work out how you should be following DORA. And so for our customers that are working towards MiCA and DORA, we're taking that kind of approach that whilst some things aren't explicit at the moment in terms of how, for example, what's the exact definition of information communication technology, we work in it on a principle base. We understand what the EU supervisory authorities are trying to achieve. So yes, MiCA, DORA, understand where that question's come up. Okay. Have the EU yet given any clarity on what counts to make a penetration test? What counts to make? So a threat-led penetration test, quite different from a standard pen test. I mean, perhaps we can take this. So threat-led penetration tests, only a certain and a much reduced number of firms will need to carry them out. The local national competent authority will make a determination on which firms need to carry out threat-led penetration tests. I'm not an expert on threat-led penetration tests, but at a high level, as you're probably aware, threat-led penetration test is the type of red teaming exercise where only a small proportion of the team will actually be aware that there's a test ongoing. The idea is to try and simulate a real-life simulation and see how people react to that. You need to have very experienced teams to run those type of threat-led penetration tests. So what the DORA does stipulate is that you should be following a particular framework, the TIBER framework, TIBER, I think it is, in order to carry out those threat-led penetration tests. So it's quite specific on what a threat-led penetration test is and the framework you should be following. It's called the TIBER framework. So there's another question off the back of that. Do ICT suppliers need to be involved in threat-led penetration tests of regulated firms? I read in one analysis that suppliers supporting critical functions for their regulated clients must participate in and cooperate in the threat. Okay, without reading it all. Yes, if you are, as I mentioned, all of the regulated firms map out their business functions. In the UK, they're called business services. And then you map all of the technology services supporting that. If you are supporting a critical function, whether you're internal or external, you will be involved in those threat-led penetration tests. It talks a lot about working together for threat-led penetration tests, and they're being pooled audits. Now, this is one of those, whilst there is some guidance, I think it's going to take some time to work out how this is going to work in practice. What they're trying to avoid is, imagine you are one of those suppliers and you are providing a service that is deemed to be underpinning critical functions when lots and lots of financial service firms. What you're trying to avoid is having to participate in many, many different individual threat-led penetration tests. So they do have this concept of pooled tests. where you can work together, so that you as a supplier only need to be involved potentially in a reduced number of test exercises. There was a lot of debate around DORA about how this is going to work in practice, and I think there's still some way to go to determine in practice how it will work. But yeah, aim is to have pooled audits to reduce the number. But there is a particularly if you're a supplier that has a service that isn't similar, or is different, is materially different to each of your customers, then there is the challenge that you're going to have to carry out individual threat-led penetration tests with each of your customers that consider you to be underpinning one of their critical services, I'm afraid, because there's a material difference between that service. So in that instance, a pooled audit won't be deemed appropriate by the regulators. Question around accreditation for penetration testers. I'm not quite sure what that means. I mean, it talks about you need to demonstrate that the pen testing companies have appropriate experience. I don't recall it referring to any particular type of accreditation. I mean, there's the obvious ones like CREST, that most financial service firms and their suppliers would only work with CREST accredited penetration testing companies. When it comes to threat-led penetration testing, it provides a lot more details about what's expected in terms of experience by the organization. But I think generally most firms these days, it's pretty standard practice already. You're only going to work with CREST accredited pen test companies.
And on that point, Al, I think if there's any further questions around kind of penetration testing, threat-led pen testing, please do get in touch with us and we can have a deeper dive or a deeper discussion off the back of today's webinar. I think there is one final question, Alistair, if you can pick that one up.
Okay, is there any reverse solicitation as per MiFID applicable under the DORA for offshore companies? Don't entirely understand that question. I don't know whoever asked that could just elaborate a bit, maybe just jump on the call and open up, just explain to me a little bit more details what you mean by that.
Yeah, I can I talk?
Of course, thank you.
Yeah, reverse solicitation, it's a term, like it's very known on the MiFID about capital markets. That's how offshore companies can operate with European users. And basically, like this is the thing when, for example, the company has, I don't know, website in Portuguese language, and then Portuguese authority finds that Portuguese website and says, you are obliged to comply with European Union laws. And then the company tries to defend itself and says, oh, Portuguese languages are spoken not only in Portugal, but also in Brazil, like we are not targeting your European Union users. We have intent to target only Brazilian people, for example. So this is like how like companies which basically don't operate in the EU, but they might fall under this, under this regulation, and that's how they can defend. But again, it's getting more tight, like how they can explain and get out of that situation. And like one more comment about the accreditation of penetration testers. I also I'm a lawyer, but I'm not very, very knowledgeable about penetration testers. But I was surprised to find this provision that internal team, I think this refers to internal team, not to external penetration testers, but to internal team. So internal penetration testers are supposed to be accredited by accreditation authority, and this list of these authorities, 27, are somewhere on EU websites. So I don't know how all these people, penetration testers is just like coders, like how they're supposed to get this accreditation. It's kind of like, I don't see it in real world how it works. That just like this comment. And basically in my understanding it's about internal testers, but the provision is quite confusing, and you can read it as it could be applicable to various kind of penetration testers, also to suppliers maybe.
Yes, I've spent a lot more time working with external pen test companies like OnSecurity, and most of the suppliers and regulated firms I work with outsource that function. So I haven't focused a lot on the firms where they might try and undertake this internally. As you're probably aware, it also mentions in the regulation that actually you have to use external testers periodically as well, even if you are on occasion using internal pen test services, particularly when it comes to threat-led penetration testing. So honestly, I don't know in terms of the accreditation for the internal teams, because we typically work with CREST accredited external firms, and as do the regulated firms I work with and the suppliers. So it hasn't come up, but I'll dig into it and I will contact you if I find anything else out. I'll definitely follow up on that. With regard to the sort of reverse solicitation, probably worth mentioning, I mean, each regulated firm has to explicitly state who their suppliers are that underpin or are material to their critical or critical business functions. And in the Register of Information report, that complex report I was mentioning earlier, where you list all of your contracts, all of your suppliers, all of your contracts, and all of the services that have been provided, you explicitly list them. So the regulator's going to know who's in scope of this through that report that's been shared with them. If you're, let's say, an offshore company providing a service to a regulated EU firm, there isn't really a way of sort of suggesting that you didn't mean to provide that service to them. You're going to end up on their reports. And if you're not on their reports, then the regulated firm's not going to be complying with the regulation. So there is, I guess, unlike sort of some other regulations where you could suggest you weren't attempting to provide a service to someone, that's not really feasible under DORA because it's quite explicit, and you're going to be in this Register of Information report. I don't know if that answers your question, but again, happy to take it offline as well.
Yeah, thank you.
Thanks everybody again for joining. Al, big thank you for kind of going through them questions here. I just want to move to the next slide before we finish. Again, if anybody's got any further questions or want a deeper dive, please do get in touch with us. If you wanted to see the OnSecurity platform in further detail and grab a kind of 60-second quote today, all I'll need you to do is kind of scan this QR code, and it will also provide you access to kind of this scan solution that we talked about earlier, as well as our threat intelligence solution called Radar. But again, massive thanks for everybody for joining. Big thank you for Alistair for helping out and discussing DORA in a bit more detail. But yeah, thanks everybody for joining us.
Thanks, Evan. Thanks everyone for joining. Cheers.
Everyone, bye.